Well, the least interesting or surprising news of all time happened today. The Bank of Canada held interest rates at 5%. That's right, they held rates again at 5%. Now, while that is not the most exciting thing that you'll ever hear, what is exciting and is interesting is some of the feedback that they provided in their reports. In addition, today they dropped the monetary report, which we'll get through in a later video, but we'll summarize some of the key points today so that you have a good understanding of not only what happened, but what some of the expectations are, and specifically what the BOC said when it came to the announcement today. Now, first off, what this means for the average mortgage holder is really key, and we're going to touch on that. The average mortgage holder right now who has a variable rate mortgage is going to note that there will be no changes to their monthly payments, their total interest, their lines of credit, their personal lines that are based on prime, and any other loans that are based on prime with any banks. But in the grand scheme of things, this could mean a little bit of a tipping point, or at least a signal as to when the bank might start lowering overall interest rates. And while they'll never guarantee things and they'll never give us a specific number, there's a few little tidbits that were left in today's announcement that are going to be really impactful and really important for anybody who currently owns real estate or is just genuinely interested in what's happening financially across the country. Well, let's start off with what's happening with Canadian GDP. Well, the Canadian economy has almost outright stalled since the middle of 2023, which is indicating we are seeing less overall economic growth. GDP is down big time, and overall we've seen a complete stop to job growth. Wage inflation appears to have stalled, and in addition to that, we're now starting to see that rental rates are being capped in many different cities across the country, which is leading people to believe that we are at essentially a high when it comes to the inflation watermark. So before we go any further, what does this actually mean when it comes to the real estate market overall? Anecdotally and statistically speaking, we are seeing a higher number of real estate listings across the market already in the third week of January in 2024. And this has shown a surprise uptick, or not surprise depending how you look at it, in the amount of listings and particularly activity among buyers and sellers. Now, some were predicting that we would see the amount of activity being reduced because of higher interest rates and renewals coming up, and so far this has not come into fruition. In fact, we are seeing higher mortgage application volume than we have typically seen this time of year or any year, which is resulting in more people shopping for real estate and getting offers accepted on homes. In fact, we are even hearing stories of people making offers on homes that are going into multiple offers, with many people bidding on the same property. Now, back to the economic report itself. What's happening in Canada is somewhat counterintuitive to what we've seen happen in the United States, where the US has shown a relatively strong recovery in their economy. However, signs are starting to show that the US itself is starting to crack, with debt levels hitting trillions of dollars of credit card debt, with a lot of people using the buy now and pay later types of policies. Now, this is likely going to start to show in the US economy somewhere in the middle of 2024. And when that happens, we'll likely see the US Treasury start to react with a downward trend, which should also force our fixed rates to come back down. Speaking of fixed rates, we saw a slide in the bond market in December leading into the first week of January, which showed fixed interest rates come down from the highs on uninsurable rates from 6.6 to 6.7 all the way down to 5.5 to 5.7 in the course of just a month. However, since then, we've seen the bond yields rebound nearly 0.5%, which has indicated fixed rates will actually rise back up again, not necessarily to the highs of October, but perhaps in the high 5 range and low 6s, depending on what happens. A big reminder though, for anyone curious about what happens during these rate cycles, there is no linear path down. There are always bumps and bruises when it comes to interest rates, both on the fixed rate side and the variable rate side. So what's next from the Bank of Canada? Well, there's some big news on the horizon. On January 31st, they'll be announcing the GDP report, which is expected to come in very negatively. And in addition to that, we'll likely look at what type of tone they set when they speak about this at that upcoming announcement. As far as when interest rates will start to come back down, most economists are still predicting a middle of 2024, with some still holding very strong on April 2024. On our side, we wouldn't be surprised to see the Bank of Canada hold rates steady until the summer of 2024. That would be June before starting to actually see interest rates work their way back down over the course of the year. Now, of course, there is just so much information and so much data coming out, but really at the end of the day, there's just no way to deny the fact that there are millions of Canadians coming up for mortgage renewal in the next couple of years, and they're paying unnecessary interest costs, which are contributing to higher inflation, which is taking money out of the economy, in effect having a negative impact overall on our GDP. In the end, the government isn't going to want to continue to see this cycle happen, assuming the rest of inflation starts to come back down. And that's why our belief is we will still be on track to see interest rates work their way down over the course of 2024 and of course 2025, where we've reached our 2% inflation target that the Bank of Canada has said that they want to achieve. Now, as a reminder, the next Bank of Canada announcement is on March 6th of 2024, and that's the point at which they'll give us another indication as to what's going to happen. So folks, if you are curious about what to expect with the Bank of Canada, what's going on in the marketplace, or anything else, make sure to stay tuned, subscribe to this here channel, and we'll see you next time.